So I'm just going to give you some best practices in terms of buying a house. It's a first time home buyer or homeowner, right? So obviously this is, in my opinion, this is not like financial advice or anything of that sort. If you want real advice on this, please do consult the services of a accredited financial advisor. So the very first thing for me would be that give yourself the opportunity to see what's in the market, to understand the housing market, to understand the benefits of the housing market that you're going to be buying into, right? Remember, this is an asset, yes, but it depends on what you're going to be using it for. So understand like all of it, where to buy it, how to buy it, who to buy it from, answer all those questions. Give yourself an opportunity to decline offers that look really good on paper, but when you really sit down and scrutinize, you start seeing the loopholes, because people are ready to be like, buy now, or it's gone within like 5 hours. But be the person that's actually making this decision, that take my offer to purchase now or it's gone, not necessarily the other way around, where they're like, this offer to purchase is valid within 5 hours or it's gone. I don't know if you get what I mean. But yes, those are some of the things, one of the things that I would recommend. The second thing would be that since a long-term lending interest rate being 7.25%, ensure that it's a fixed interest and not variable or linked interest, right? Because that will fluctuate with the inflation, or fluctuate with what is happening in the economy, and you don't want that. You don't want your loan repayment period to be extended because of it. So if you can, if it's possible, I think it's not possible, but just inquire enough to a point where you can negotiate it even with your banker, that I would like a fixed interest. I'm only taking this loan or this deal if it's a fixed interest, right? And then the third one to look into, right, is to actually ensure that you take insurance, especially if you're not permanently employed, right? Some kind of insurance, be it income insurance, or be it credit life insurance, or credit insurance, or gap cover, whatever insurance that will actually help you in the worst case scenario, so that you are sure that this asset will not be repossessed, right? From my understanding, it's a requirement that you have some kind of insurance whenever you're taking this huge purchase, but sometimes banks don't follow the procedures that are supposed to be in place. Not that they are, I'm not saying people are not observing the law or whatever, but it's not as clear cut as we think it is, right? So you need to protect yourself in the case that your situation is not favorable, right, by taking some form of insurance, right? And then the fourth thing is to have a debt repayment model, right? Either you employ what is called an avalanche repayment model, or a snowball debt repayment model, right? So an avalanche just means that you pay the debt that has the most amount, your biggest debt, right, in terms of like the loan that you took. Like, let's just say for a house, if you took a house that's 1 mil, that's probably your biggest debt. Maybe for a car, you took a car that's 300,000, that's your second biggest debt. So with the avalanche model, you try to pay, like, ensure that whatever additional income or whatever's left over after you've paid your expenses, your bills, your other debts, right? With your other debts, you pay the minimum amount, and with your biggest debt, that's where all that amount will be put into that debt, which is the house. And then the second one, which is the snowball model, or snowball repayment model, you basically pay off the smallest debt first. Let's just say you have a credit card, and maybe in your credit card you took about 5,000. So you ensure you pay it off. After that, whatever you were using to pay off that debt, you pay the second one. Let's just say the second one is your car. You pay it, you take that amount and you put it into paying off your car. And once you are able to pay off your car, then now it's onto the house. And then all that amount that was used for paying the credit card, paying the car, then it's now going to be employed to pay off the house, right? And then the fifth thing that you must be aware of, that you should inquire about with your banker, or whatever financial institution you decide to go with, is there's a model where you can actually use your bond as a saving mechanism, right? Instead of having a separate savings account where you're saving separately and saving for whatever goals, you can actually save into your bond, right? And in the case of emergency, you are able to say, because you're paying more than your installment. Your installment is a fixed thing. You cannot, I'd say it, fuck around with it. So yeah, these days I have a potty mouth. You're all gonna get used to it. But then you can't fuck around with that installment. Every single month, if you all agreed on 5K, you have to pay that 5K regardless of what is happening in your life. And currently we know that there's a debt holiday, which is not a holiday because it's going to increase a lot of people's repayment period by more, sometimes even up to a year, right? If you were due to pay it off in 2021 and finish it off, you're probably going to finish off the house in 2022. So that is the reality of the situation, that whenever you take out a loan, you have to pay it back one way or the other, right? Whether you get into debt consolidation if you can't pay it, or debt restructuring if you can't pay it, the reality of the matter is that you will have to pay it one way or the other. So yeah, just having that model where you save into the bond, so that it lessens the interest period, the interest that you're supposed to pay if you pay it in that specified period, then that will help you. But you can still have access to that amount that is on top of your installment. So let's just say, for example, you're supposed to pay 5,000, but you pay 2,000 rand additionally every single month. That goes to the savings pocket, right? And if you need that 2,000 rand for an emergency, you are able to have access to it. So just inquire about such a model, and that will definitely help you. I hope you guys have learned a couple of things about being a first-time home buyer or homeowner, and what are the things that you must look out for, and what are the things that you probably shouldn't be doing that will cost you heavily as a first-time home buyer. We all want to own property, we all want to own nice houses, but make sure that it is not going to be a headache, it's not going to lead to a very bad financial decision, or it's not going to lead to stress later on where you really regret this massive asset that you can't do anything about, that you can't sell to anyone because maybe we're in an economic recession that is worse than when you tried to buy this house or when you bought this house. So be aware of all those things, and good luck if you're in the process of doing that, or if you are looking into doing that. I hope this was valuable information. So thank you. Love you.